What's up, everybody? Happy Friday. Hope everyone's having a good day. Got some interesting stuff in the markets today to cover, including the Three Arrows Capital founders breaking their silence, their first interview since the collapse. Some very interesting tidbits in that interview. I'll go over that later. Plus, the Tesla Bitcoin sale. I'll tell you exactly what I think went down later in the episode. Don't forget to like and subscribe button. Follow me on Twitter at bencryptoshow. Let's begin. So first, yesterday, we had the DeHotels interview. It went very well. It was very nice to speak with Demonte and Gabrielle. You can find the interview here. It's doing very well. 2,300 views, a lot of traction. This thumbnail here was a huge hit. It's got a 40% click-through rate when it was in the YouTube suggested videos on the right side of the screen. That's unheard of. Usually it's around 5% YouTube average, 40%. Very good. Great work on the thumbnail guy with this cover here. And the interview went good. Give it a listen. 20 minutes. We discussed everything about the project, use case, partnerships, roadmap, white paper, funding, pre-sale, private sale, all that stuff. Here's the website, DeHotels.io. So you probably want to check out the white paper here. It's in the top right. And then the pre-sale whitelist down here. They ask you if you're interested in participating in the pre-sale. You answer a few questions about yourself, what your interest level is, the amount you might want to invest, addresses, all that kind of stuff. Fundraisers, they've kind of sort of changed over the years. There was a period of time recently, it was just all the VCs getting in on the fundraisers. Then in 2017, 2018, there were these huge public sales where it was almost entirely just individual retail investors investing small amounts. Now it's kind of more of a hybrid. They are talking with VCs, a lot of big investors, but it's also mostly open to everyone, but they want to make sure it's the right fit. So if you click on the pre-sale whitelist here, it takes you to this screen here, and then just answer some questions about yourself, put in how you could add to the project. They want to be sort of selective with their investors. They want to make sure it's a good fit, and then you can add stuff, and then they obviously want to make sure, people won't be dumping their coins quickly, stuff like that. So if you have a big, Twitter following, put that in. If you work for a company that might be a good fit in the ecosystem, or maybe you're attached to the Polygon blockchain they're building on, put that in there. If you have any other connections, or you're connected to any other entities, maybe you work for an entity in the space that might be a good fit, good partner, put that in there. So this sort of investing is kind of just right fit investing, and it does seem like most of the investors, at least, who invest, that they will have some sort of communication with, as opposed to just a big public sale with 1,000 people in it and no individual conversation with each. But different than, a big VC fundraise where they just fundraise from 2, 3, 4 VCs, and just very streamlined conversations there. So it's sort of a hybrid. Check it out. I'm very excited about it. I'll be giving you more updates. We'll probably be doing some more, maybe like an AMA style live stream with the team next time. Should be fun. And then, as I mentioned, so they're building on the Polygon blockchain. I mean, Polygon has just been quietly tearing it up the last month. You haven't read anything about Polygon? Well, I guess last 30 days, 107%. They've been way outperforming Bitcoin, Ethereum, the rest of the market. They've just been quietly building. It's amazing. So that definitely appears to be a good pick by the team. A lot of times these blockchains, they just kind of need to be energized, motivated. They reach success, and then there's a lot of other blockchains, and the projects don't really stall, but they kind of lose a little bit of that early sort of hoopla momentum, and then they just need to be kicked into gear again, and that is what is happening with Polygon. Also, they're always in direct competition with Solana. Solana's had some outage issues recently. They've had more of the hack problems. So Polygon could be capitalizing on that. And then someday next week, I'll be doing the video spotlight, video review on the DeFi project. Not sure which day, but that will be coming next week. And they do have a coin that's already traded, that medium, small market cap size coin. So that's a little different with that one. So keep everyone posted when that will be up. Markets today, Bitcoin. This is the week curve here. It's looking pretty good, as I said. It's on a steady upstring the last 5-6 days. 23,200. This is kind of like what I predicted. So my prediction for the next week here, I think it'll probably be flat today and tomorrow. Then Monday, we'll probably have a slight dip. Sunday, the regular dip. Monday, the dip before the Tuesday interest rate announcements that always happens the day before, and then Tuesday, midday, late afternoon, early afternoon, U.S. time, then I think prices are just going to pump and skyrocket big time. That'll be the end of the interest rate announcement. It'll be either be a 75 basis point raise or a 100 basis point raise. I don't think I don't think it's going to have as negative effect as it has in the past. I think people need new headlines. I think the inflation, interest rate headlines, it's just been months and months of this. I think people are just kind of used to it by now. It just doesn't have the shock value that it used to. It doesn't induce panic trading the way it used to. So I think this is all in line to not really have too much negative price movement beforehand, and instead just have a huge relief rally afterwards, Tuesday afternoon, right after the announcement's done, because the prices always pump after this announcement's done. And then you don't have to worry about another interest rate announcement for another 6-7 weeks. And then I'm expecting prices to kind of carry through the positive momentum, carry through the rest of the week, through the end of July, and then into the next week after that. But yeah, I'm very bullish for next week. Definitely some positive momentum picking up here. Greed and fear holding strong at 33. We were in the neutral territory yesterday, 34. 33 is fear, so it's way above. Remember, it was 6 a month ago. Things are definitely trending up. Let's move on to the Three Arrows interview. So this is pretty good. So the Three Arrows founders, Suzu and Kyle Davies, they have not really spoken since then. Have barely even tweeted. They gave this interview with Bloomberg. You probably read some articles about it. There were some interesting tidbits in it. I will tell you what those tidbits are. So a lot of it's just not really that surprising. They said that, they said the fund basically collapsed. It was overexposure to Terra, and then essentially they just had too much leverage on the books, and they were betting that we were going to have a quick turnaround. So this was last July when prices fell very quickly from 60 to 29,000, then it almost immediately reversed back up and went up here. So they were basically betting that this would happen again this year, a year later. It didn't, as we all know, so they put on tons of highly risky leveraged bets, betting prices would turn around from 30 and shoot back up to 60. They didn't, so they got wiped out there. They also said, this was interesting, they said they really got wiped out when prices went from 20,000 to 17,000. Reading between the lines, it sounds like their liquidation point was right at about 19 to 20,000, and then Suzu made an interesting comment in here somewhere. He said that another entity in the space, this sounds pretty accurate to me, another entity in the space or other entities knew what he was insinuating that these other entities knew what their liquidation points were, and then they were shorting the coin right before then, so the price of BTC would go down to that liquidation point, which would then cause an immediate further reduction in prices. So it sounds like, when Bitcoin got to 21,000 or so, the entities knew, okay, Three Arrows Capital, they're going to be liquidated at 20,000, and then if they're liquidated, prices are going to immediately go down to 17,500, 18,000. So let's get a bunch of shorts in, just inch the prices closer to the liquidation point, and then once they're liquidated, we still have our shorts in position, and then bam, we clean a huge profit. That has happened before. That's a known sort of semi-dirty trading strategy, but when long-term capital management, when they blew up, that was the 1998 regular stocks equity hedge fund, the exact same things were happening. Other big investment bank traders, Wall Street traders, they knew exactly what the liquidation points were, and they kept selling accordingly to push prices down further so that fund was liquidated immediately, because once you know a fund's liquidated, you know prices quickly go down further. Exact same thing. So that wasn't really surprising. What else did they say here? Took issues with the extravagant lifestyles. They do not drive Ferraris and Lamborghinis. They do not hang out in nightclubs. So remember that. No more Ferrari and Lamborghini talk. No more bottle service in the club talk. But they did have a $50 million yacht. He essentially confirms he did live in a $35 million house. He had a second house too. So, yeah, I mean, if you buy a $50 million yacht, it just doesn't do you any favors. If this was, like CZ or Sam Bankman-Fried or Brian Armstrong, Vitalik, then $50 million, even though it would probably still raise some eyebrows, that's kind of in line with their levels, so it wouldn't really be that big a deal. These guys kind of more in line for like a $5 million yacht, I'd say, not a $50 million yacht. It just doesn't make people like you. It just raises eyebrows. It's okay when things are going well, but when shit hits the fan, that's the kind of stuff people just don't like. And he basically confirms they did have the yacht. He said, oh, there was a clear paper trail, and it was not like used with stolen funds from the company. But still, if you buy a $50 million yacht when your vibe is more like a $5 million, $10 million yacht, that creates some enemies. Also, the Lamborghini comment here, it appeared to, so he said specifically, Suzu, we were never seen, driving Ferraris and Lamborghinis around. That appeared to rankle Arthur Hayes. Now, so Arthur Hayes came out at this point today. So amazing, I don't know where to begin. Hayes mocked 3 hours interview. The reason this rankled Hayes, most people probably don't know this, but Arthur Hayes showed up to the 2018 consensus in New York driving a Lamborghini, and that's widely viewed to be the one incident that kind of put a bullet on his forehead from the government and the SEC. The consensus was in New York in 2018. The SEC is mostly in New York. That was a huge conference. I was there. It got a lot of publicity when he showed up to that conference in the Lamborghini. And that most people believe, and I do believe that was the one incident that kind of, pushed the investigation to the next level and really, put that target on his back. So just a sort of a comical sense here, he was not impressed with Suzu's apparent slight with we are not driving Lamborghinis around. That was just sort of funny. What else in here? They also said, so the Do Kwon issue, so they said, we began to know Do Kwon on a personal basis when we moved to Singapore. Do Kwon was frequently in Singapore. They felt that the project was going to do very big things, but if we had known it was attackable in some ways and had grown too fast. So basically what they're saying is, in so many words, Do Kwon's a nice guy. We're friends with him still. He's kind of a good salesman at the same time. When you're in Do Kwon's presence, he's very charismatic. He's very convincing. You just, after a conversation with Do Kwon, it sounds like you just feel like Do Kwon's just going to take over the world, and he's basically just a good salesman. He's not like lying. He's just a good, charismatic salesman leader, and it's kind of, I can understand this, this sort of stuff has happened to me before, maybe on Suzu's side, but yeah, sometimes when you're in somebody's presence, you're just kind of swept away with their aura, and you don't really focus on the negatives of the project, like that it was attackable in some ways. For example, when Terra pulled the $150 million in UST off Luna all at once, leaving themselves vulnerable at a very specific weak spot that was attacked, as opposed to, if they had been a little more careful, they should have pulled $5 million at a time, $10 million in UST at a time. Then they would not have been attackable. This wouldn't have happened. So that was an interesting interview with Suzu. It was mostly positive. They cleared up a few things, but they still, $35 million house, $50 million yacht, even with their own money, people just don't like that stuff, even though it wasn't like stolen or anything like that. Moving on, so the Coinbase insider trading case from 2 days ago, I assume you probably all read this by now. This was, I guess this guy was a product manager, Ishan Wahi. I guess there was like a messenger, I guess the top executives at Coinbase had a specific group chat, company group chat, where only them and not the rest of the employees would know exactly which coins are going to be listed on what day. So this guy's a product manager, that's a lower level executive. He did have access to that group chat, and then over a 12-month period, he bought, I think they said 15 coins, or I think it was actually 24 different coins. Yeah, 25 different coins over a 1-year period. He didn't buy them themselves. He relayed it to his brother and his friend, and then those two did the buying. So that's how they got him. But yeah, it's really not too hard for the SEC to catch these things. I remember I was on Reddit the day, so it was 25 cryptos he bought on one day. I think he bought like 14 of them at once. This was maybe 3 or 4 months ago when Coinbase announced a bunch of coins that were going to be on their to-be listed list. And the Reddit boards were buzzing. Some sleuth on Reddit found a wallet address that had literally bought exactly all 4 of those coins. No other coins, just all 14 of those coins, like the day before or something. And then Reddit was just ablaze. So even though that wallet obviously wasn't linked to this guy's name or his brother's name or his friend's name, it's really not too hard for the SEC to figure that out. They could just trace the wallet and all the other transactions. At one point, some of those funds might have flown to an exchange that had this guy's name on it, or his brother's name, or his friend's name, or maybe they just did a simple IP search of the wallet address of the person's maybe if the coins like logged into a certain Discord server, they could have done or a certain Twitter account that they knew the person associated with. They could have done a simple IP search there, and then it sounds like then the person's brother's name would have popped up, or the friends' names. It's really not too hard for these people to find this, especially in crypto and with all these sleuths, like the Reddit sleuth, who literally that day he noticed all 14 coins were bought by one person the day before. I mean, that was obvious. So that's how they got him. He was also, they caught him, I guess he tried to flee to India in May, bought a one-way ticket. Coinbase had fired him. Then they said, you need to come down for one last meeting. In a couple days, he said, sure, then bought a one-way ticket to India. And then they arrested him at the airport, which shows to me, since this wasn't really a huge case, it was $1 million stolen, so that's not huge. It might seem a little surprising. They would be, organized enough to kind of stop him at the airport, but that shows to me, unfortunately, for this guy here, he seems sort of ideal for them to take, make an example out of. This is the first insider trading case in the U.S. in crypto. They prosecuted one NFT insider trading case recently, the OpenSea executive. This is the first actual coin trading insider case. It's fully U.S. It's got a big name attached, Coinbase. So unfortunately for this guy, whatever his name is, Swall, whatnot, he just seems like prime bait to be made an example of, and that is as evidenced by, even though it's only a $1 million theft, they did stop him at the airport, so they were onto him basically. So, yeah, no insider trading, people. No insider trading. It's much easier than you think for them to catch you. No insider trading. And anyways, the bull market's starting now, so no need for any of that. Let's see, moving on. And then Tesla. So, Tesla sold 3/4 of its Bitcoin holdings. This was, again, 2 days ago. I read this. I mean, this is kind of surprising that Elon would have made the decision to sell these. I was a little surprised. I think this, to me, I believe this sounds like the CFO. He made the call specifically because his credibility, his job is a little bit more on the line than Elon's is. But yeah, there were the looming COVID shutdowns in China a few months ago, and Tesla's a huge supply chain, very large in China. So I think that's an accurate statement. They just wanted to increase their cash position because it might be negatively affected with future lockdowns in China. This was a few months ago. I'd still be a little surprised, given all that Elon would have made the decision to sell almost $1 billion, I think. And then on the earnings call, the CFO was the one who answered most of the questions about the sale, more so than Elon himself. So I think that this is the CFO, because if they do run into a major cash problem, and if Bitcoin did, for whatever reason, go way down and they lost a ton of money on that, the CFO is on the line. His career is pretty much permanently over. It's a very high-profile position. So I think he just acted a little bit more sort of, risk-averse conservative than he needed to be. And I think the decision was mostly just his, and Elon approved it, kind of showed faith in his CFO. But I really would be hard-pressed to think that this was fully Elon's decision. Regardless, didn't really harm the market too much. We went down, like 3 to 4% in the news yesterday. It could have been worse. If this was during a downturn, it would have been much worse. So it's kind of lucky it happened. The news broke during an upturn. It's not bad at all. And that is it for the day. So again, hit the like and subscribe button, please. That helps me. Follow me on Twitter at bencryptoshow. No episodes on the weekend. I'll be back with a new episode on Monday. See everyone then. Until then, this is Ben. Later.